In the last 2 weeks, the markets really had to rethink about the entire administration. After Election Day in November of last year, markets became very optimistic about a new administration, pro-business stance, a cabinet that had many business leaders, and the potential for a Trump put that would protect the downside for markets. And it's become evident that consumers and businesses have become a little more uncertain because of tariffs and the effect it's going to have on the economy. So the economy is slowing. And then measures like DOGE, which have really cut a lot of federal spending, and some of these programs like U.S. aid are potentially leading to a softening of the economy itself. And so now investors are wondering, are these Trump initiatives actually good for markets? And that's why we've had many stocks come under pressure.
Tom Lee discusses how market sentiment has shifted over recent weeks, moving from optimism about a pro-business administration to growing concerns over tariffs, federal spending cuts, and their potential to slow the economy. These factors have led to uncertainty among businesses and consumers, raising fears that the economy may reach stall speed, which could force policymakers to reverse course with fiscal and monetary interventions. In the crypto market, Bitcoin's recent price movements have drawn significant attention, with a mysterious player, Spoofy, aggressively buying during dips. This activity has sparked optimism amidst otherwise volatile conditions, even as some traders highlight bearish signals suggesting potential further declines. The interplay of confidence and caution reflects the broader uncertainties in the market. As these economic and market dynamics unfold, they emphasize the challenges investors face in balancing risks and opportunities. Whether in traditional markets or crypto, understanding these shifts is essential for navigating an increasingly complex financial environment.
If the economy becomes uncertain and consumers sit on their hands or confidence falls and businesses slow expansion, the economy risks going to stall speed. And nobody wants the economy to go to stall speed, because if you enter a recession, it'll force the administration to unwind everything. Because as you know, when you have a recession, you have to have fiscal expansion, meaning no austerity, spend a lot of money, and it reverses all the things that the administration's trying to accomplish. And similarly, the Fed wants to avoid stall speed, because instead of worrying about full employment and inflation, if employment starts to weaken, the Fed has to go into easy money right away, which means a put, of course, exists at a certain level.
At a certain level, why? Do you have a sense that, for, I guess, us in the finance community, we think Besson is probably the smartest guy in the room. Do you think he has a good voice in this administration? If he says something, is the president likely to listen to saying, we may be approaching stall speed if you do this?
Yeah, I think he's got a lot of credibility. I think that his cabinet is not bureaucrats or career politicians, but people with private sector experience that he does respect, just like Trump has clearly demonstrated a lot of respect for Elon Musk. I don't think it's lost on Besant that markets will clearly indicate the level of stress before we start to reach stall speed. And I think that's why I don't think stock markets have to feel that there's unlimited downside if the economy starts slowing.
Tom Lee highlights a notable shift in market sentiment, transitioning from initial optimism about a business-friendly administration to growing uncertainty fueled by tariffs and reduced federal spending. These policies have dampened confidence among businesses and consumers, raising concerns about a potential economic slowdown. If the economy approaches stall speed, it could prompt a reversal of current fiscal and monetary strategies, complicating the administration's agenda and market stability. Meanwhile, the crypto market remains turbulent, with Bitcoin's price swings drawing attention. A prominent player, Spoofy, has been actively buying during dips, injecting cautious optimism despite bearish indicators suggesting possible declines. This dynamic mirrors the broader economic landscape, where uncertainty shapes both traditional and digital markets, requiring investors to stay vigilant and adaptable.
Fed Chair Powell himself is, on balance, slightly dovish, but he does lead by consensus. And it's apparent when you look at the Fed minutes, the discussions at these meetings, that many FOMC members are just uncertain of the consequences of tariffs and the new policies. On the surface, they realize it creates short-term inflation pressures, but the long-term consequences are unknown and possibly would slow the economy. So I think that the Fed's decision is really to be on hold until they have visibility. The market views the Fed on hold as a hawkish pause at the moment, meaning the Fed realizes the employment market isn't creating inflationary pressures, but the current inflation environment isn't necessarily convincing them that inflation is set to cool again, especially with tariffs. I think that this whole conversation will change if the labor market begins to soften. So coming back to Doge, it's possible that it's either the February or the March employment reports begin to show the negative effects of these layoffs and these terminations. And if that's the case, this will pull the Fed off the sidelines. And so the Fed has to go into full dovish mode. The Fed has acknowledged that last year, a lot of the inflation we're seeing is what they would call statistically lagged inflation. You know, things like shelter, market-based measures of shelter are showing much less inflation than the official measures, or auto insurance, which is just lagging market movement. So I would say the Fed itself acknowledges inflation, even though they may not win the PR war there, meaning markets aren't convinced inflation's cooler. Market-based measures show inflation's much softer. So I think they would end up cutting.
The discussion highlights a significant turning point in the markets, driven by shifting perceptions of the administration's policies and their impact on the economy. Initial optimism following the election, anchored in expectations of a pro-business stance, has given way to concerns about tariffs, spending cuts, and slowing economic growth. Investors are increasingly focused on whether these strategies will sustain market stability or if the risks of a recession will force policymakers to reverse course. These uncertainties underline the fragile balance between fiscal policy and market sentiment. On the cryptocurrency front, Bitcoin's volatility has remained a focal point, with major players like Spoofy influencing market movements by accumulating during price dip. This behavior reflects the ongoing tension between bearish chart signals and underlying optimism among crypto enthusiasts. As the Fed takes a cautious approach, balancing inflation and economic pressures, both traditional and digital markets face a critical juncture, urging participants to stay informed and agile. How do you think the administration's economic policies will shape market trends in the coming months? Can Bitcoin sustain its upward momentum despite the mixed signals from the broader market? Feel free to share your thoughts in the comments below.